Hey, everybody. Thanks for joining us today. Today, we have Shadi Sawalha on with us, and he is a reverse mortgage money guy. He understands a lot of the high level financial stuff. So I'm really excited to have you on here today. Would you mind just introducing yourself to the audience and a little bit about your background? What brings you to do reverse mortgages?
Sure. Thanks for having me on, first off, Christina. I have been in the mortgage business for about 23 years. Before I got started in mortgages, I was actually I spent 2 years with Merrill Lynch as a advisor slash stockbroker kind of thing back in the late 90s, and then I moved and transitioned into mortgage. So having that Merrill Lynch background, kind of helped me understand more about money, right? How it works and how really to advise people on it, right? The reason why I left that industry is I found my real passion in mortgages and in real estate. And so I've been again a loan officer for the last 23 years. I've spent time in as a mortgage broker, as a mortgage banker, and then my last 10 years I spent in a very in a large a bank here in Los Angeles, and I worked with, excuse me, with branch managers, relationship managers on the retail side, on private banking and entertainment, assisting their clients with anything and everything related to a mortgage.
Oh, that's amazing. So you have a deep understanding of not just the money side, but the mortgage side and how they work together.
Yeah, absolutely. And also with the bank, you work with different departments. It's not just on, with a branch manager or relationship manager. You also work with the financial advisors there too. So, for example, I literally had this conversation with an advisor last week, and the conversation was, "Hey, Michael, has anybody approached you?" And Michael's been an advisor there for 20 something years. He's got a very large book of business, a lot of clients that he takes care of. And a lot of these clients, too, just me not going off, in a tangent about Michael, but, the bank has like legacy clients, right? The bank was started with a father and a son, right? So they have clients that have been with the bank for decades, and so his clientele could, more than likely, I would assume, has a lot of clients that are retirees, right?
Okay.
So my approach to him was, has anybody, because we didn't do reverse mortgages at the bank, right? So that never came up,
Yeah,
right?
banks typically don't.
They don't do them, right? And again, I will segue into why I'm even like what's interesting to me about a reverse mortgage, because in the last 10 years, I was never exposed to them until now being with Amerifund and working with you, right? So my conversation was, Michael, has anybody outside of the bank as a loan officer approached you and to talk to you about a reverse mortgage and how that could benefit your clients? And he said, no. I said, I was surprised about that. And second was, well, how much do you know about a reverse mortgage? I mean, I know, but I don't know. So, Shadi, tell me what you know. I said, okay, let me give you a hypothetical example. It's actually a real life, it's happening today. Okay. Inflation is at an all time high. Okay. Stock market is basically low to flat, right? Clients are getting older, medical expenses are getting more expensive, right? So what do you do when your client wants, that may need some in-home care or may need some, prescription, whatever it is? What is your option to them? I have your retirement account. Now I have to sell securities in a down market, right? To help fund these extra expenses that might have come in out of nowhere, or that they were coming, but you just didn't properly plan for them. So you have these clients that are retirees, more than likely, we can assume, right, that they're equity rich, right? They don't want to sell the house. They probably paid for the house. The property taxes are basically nothing. So why would they sell, buy another house, or go rent and, you know, pay $5,000 or whatever it is, whatever market you're in. So anyways, I just basically gave him the example. Why don't we just think about, I said, you could do a line. I said, did you know that you could do a line of credit for as a reverse mortgage? And he said, no, I had no idea. I said, okay, perfect. Okay. You don't have to, if you get a line of credit, you've got different options. You could say, I want to use it as a line of credit, or if I want to take small increments each month to offset these expenses that I'm incurring or gonna be incurring, then you don't have to sell their securities, right? Their portfolio is down already, and now you're going to need to sell.
That's the
So
worst time to sell.
yeah, he hadn't. So he said, yes, yes. It actually, he said, I literally just had this conversation with somebody about a reverse mortgage, but I just had nowhere to go to. I had like no idea. So
20
yes,
years, 20
20
years,
years.
and he doesn't have a resource.
No,
And the common thing we hear is, oh, talk to your financial planner about a reverse mortgage if you're considering them. But in 20 years, he didn't ever have any education on them.
no. And he's one of the top advisors at the bank.
It's
So,
common. It's
so it's
really
very
common.
common. And having spent a little time, small bit of time in his world, and also working with these guys when I was with them at the bank for their clients that just needed traditional forward mortgages, their world is it's consumed in in equities, in structuring retirement plans, constantly on the phone with their clients, managing risk. They don't have time, right, to seek out things that are reverse mortgage related. It's just not in their world.
That's a
So
great point. They don't get paid for this product. They don't
no,
sell this product. The
correct.
training is sorely lacking education. I've seen some of the training and it's just a little bit, if at all, and that's kind of more recent. This is just really, really great insight. Please keep going.
Yeah. So to continue to that point is that it's if like you said, if the bank doesn't offer it, where is your client? And maybe the client hears about it on TV. Okay. Don't you want your client to be working with somebody that you know and trust, rather than some person that you pick up the phone and you call an 800 number and you have no idea who your client's talking to? What if they do it and they get put in a really bad position because they were not advised properly? Because as you and I know, it's not just one kind of product. There's different options to it, right? What if they did some kind of fixed rate product that didn't really meet their goals, when they could have done something more on on adjustable rate, right? Again, so there's these things that you when you're talking to these advisors, is that, hey, I'm your trusted person and you can trust me with your client, right? I know you see me, I'm real. I'm not just some person that's sitting behind a phone that probably has little or no training, and that the only thing that they care about is closing the deal, right? That's it. That's it. They don't really know your client. They don't know you. So why would you put them? They have their savings with you. Wouldn't you want them to be in care of the equity in their home, right? It's like, so again, that's really the approach that all people should be taking in, when we're talking reverse mortgages with people. Is we got to put those people first, because again, there's not a lot of resources out there. And if they are out there, you just don't know who you're dealing with.
Yeah. And you're naturally an advisor, and I work with you. I know you've put in the work to really understand the ins and outs. And what we see at some of the companies, hopefully that'll be going away, but some of the companies don't really teach how to analyze the goals, how to analyze and structure the reverse mortgage to fit perfectly. So the client's not getting too much interest charged right away. The client isn't getting a giant lump sum of cash that they don't want or
Right.
need,
They don't
but
even need it.
uh,
Yeah,
yeah, but they didn't even know there was another option. There's so many more options.
exactly. Exactly. So it's a really powerful tool. To segue into why I am so interested in it. We have again, it's kind of in my wheelhouse somewhat in terms of advising clients on money, right? Understanding money, the investment kind of background is that we have an aging demographic. It ain't changing, Um, and we are still equity is still is at all-time high. Inflation is crazy. People are The Fed wants you to lose your job, for God's sakes, right? So they can bring inflation down as they raise interest rates. That's their biggest thing, is that it's going to be painful. Well, great. Thank you, Mr. Powell, for having all these people not have jobs, right? So, I mean, again, the world that we're in, it just seems to be, somewhat just chaotic, I guess you could say. And when you're older, you can't take hits and recover when you're in your 20s, 30s, or even 40s. When you're in your 60s or 70s and whatnot, you can't really afford to take a big financial hit, right? You need to be able to understand that it's not just your stock or bond portfolio that you can lean on. You've got the equity in your home, and we can help you manage that also, right? So I don't know. I'm a people person, people first. When I see an opportunity like this and we can reach out and help more people, and more than anything else, educate them, it's a gift to us loan officers to have that ability.
That's a gift to us, but it's also a gift to the public that you're
Yeah,
educating. Whether
yeah,
it's a fit or not, hopefully now they understand they have options.
exactly. And let me bring up another story that I had also just late last week. I had a client back in 2019. She called me, and she's actually a very good friend of my wife's. And she called me and she said, "Hey, I'm obviously going to leave names out. Um, you know, um, I'm just going to make up a name. John and Susie. John, husband, of course, is starting to get dementia, and they own their own business, right? They needed help. Okay. Um, I couldn't help them at that time. They had a first and a HELOC. They needed to consolidate. There was just nothing there. We couldn't qualify them. That it came down to it because of the business and how it was being managed. When you can't remember to pay bills, or you don't remember that you have clients that are coming in to get the service that you're providing for them. So lights went off, and I thought, whoa, my goodness, Susie, I need to call you. And I called her. I said, hey, what's your situation now? What's happening now? Well, husband it's severe now. Okay. They have an older son that is trying to help them. He is trying to help manage their everyday living, right? Just giving them money, helping keep the family business in place, right? But it's difficult for him because he's got his own family. So after speaking with Susie, I spoke with the son, and it's really heartbreaking because it's like I don't know what to do, right? I don't know how to do this. Dad's always ran the business. He's always, now I'm coming in. I got to pick up the pieces, right? And how do I pay their expenses and my expenses, since now I'm basically leaving what I was doing, right? And then taking over so they don't lose the business. Their business and the parents' home, that's all that they have. They have nothing left, right? So keeping the home is a huge deal to them, right? I brought up, have you thought about this? When back in 2019, I didn't do reverse mortgages, right? The bank didn't do them. So I never brought this up. I didn't even think about it. And he said, I've heard of it, but what happens, like, I don't want to, like, again, my parents' home, the equity in their homes, they have a lot of, that's only thing that is getting passed on to him. So it makes a lot of sense for him to be worried about, well, what happens, God forbid, when that time happens, is the bank going to take the home? That is the biggest misconception as the more and more and more I talk about this, that is people's biggest thing. It's like, the bank is going to take my home. I said, no, they're not. You got to pay for your property taxes and you got to pay for the insurance. Okay. If you don't pay for your property taxes, whether it's a reverse mortgage or a first mortgage, whatever mortgage, it's, you could get foreclosed on. But there are videos out there of I won't say the names of advisors that people listen to. One person, I couldn't believe the video, how he was ranting about what a horrible product it was. And the percentage of people that end up getting foreclosed on, he had some kind of percentage, some people who've gotten reverse mortgages and then ended up getting foreclosed on, right? Because they didn't pay for their property taxes. That
Well,
was this thing,
that's
you know.
one thing, but when we talk about like that big person, I know who you're talking about. He's kind of a religious
Yes.
leader.
Yep.
We're not going to say his name, but
Yep.
anyways, what he didn't address, he actually came out later and said, reverse mortgages are not that bad. I
Uh-huh.
apologize. And he
I
said, I
didn't see
actually
that video.
he came back
Okay.
out and said, I was actually wrong and I was misinformed, which is everyone. But anyways, this person, the natural process to close out a reverse mortgage for someone with no heirs is a foreclosure. If they cannot find any heirs
Uh-huh.
anywhere, and a lot of people who have no heirs will do a reverse, the natural process to close that out is a foreclosure. It's not some horrible, bad, the word foreclosure has gotten this really bad reputation
Sure.
because it's done on people, who don't want that to happen. But
Yeah.
if the borrower is passed, that's the natural. So the stat that he was talking about isn't just people who haven't paid their property taxes or insurance or mortgage fraud. They moved out of the home and didn't tell them,
Right.
didn't pay the mortgage back. It's not just that, it's the natural. So that stat kills me because it's the natural foreclosure process. And so that stat's larger for reverse mortgages. Of course it is, because that's a large demographic of people who think, okay, I should do this.
Yeah. Yeah.
Yeah,
And
that's
isn't it interesting? It's also a financial advisor that has a huge stage, right? If we go back to my guy at my bank that didn't know anything about it, now you have this person that has this huge stage, this giant audience, and is really misinforming all of them by ranting and raving about nothing, about not completely understanding what information was given to him. He should have maybe done a little bit more before.
right.
I
And
think
and
it's
in
silly
my
to do these
opinion,
rants. Yeah.
he's so rants, yeah. He's so out of touch because how long ago was it that he was poor and didn't understand the credit system and figured out how to operate to get himself out of it? And then he got onto stages and started making a lot of money. Well,
Right.
he's preaching about this one way to live. And truly, it is a massive underserving for so many people because not everybody fits into that. And it's like, okay, I'll call him Shave. Okay, Shave. What do you want for this person where the situation you just talked about, right? This is what they have. They have to figure out how to keep the business afloat and that the house. How do you make that work, Shave? Tell us.
Well, exactly. So, I said, I said, just think about like eliminating that stress. Okay, this is verbatim. I need to stop the bleeding. He's got to stop the bleeding, right?
I've heard that
And
phrase
it's
too, and
just
it's
not,
so painful to hear.
it's so, listen, this is stress on people. Like, this is crazy stress. Money, when you're when you don't have it and you've got expenses and it's super stressful. It could cause a divorce between him and his family. Like, this is how stressed, because he's taking care of his parents, right?
Yeah.
I said, the bleeding, you're going to plug that hole, right? Getting rid of that payment, I'm not going to say the payment either, but getting rid of that payment, right? It's not a small payment. That will stop your bleeding, right? And he said, yeah, of course it will. So again, I'm excited to help them, and they're in a position that they can take advantage of this. And thank God that they have the son is there for mom, because mom, what's mom doing? Mom's dealing. I mean, I've never dealt with anything like this, right? With never, thank God, not having a family member or a friend to to not remember, right? I mean, that's what mom is dealing with. I mean, I freak out when I put my keys somewhere and I can't remember where. You know what I mean? It's like when you're when you deal with something like that. So again, just that is going to be a huge relief, not just for mom, right, and helping with dad. Now you also got medical expenses too that you could take care of too. So
Right.
all
And
around,
that's the difference for some people in this situation is when the money starts to get tight, can we afford the prescription to keep my person alive, the husband in this case? And the other thing that people don't always talk about, and this I've had clients in this situation as well, a business owner like this gentleman typically has been handling it all. And so the
yes,
family trying to come in, they don't know what's not getting paid. The business owner himself has moments of clarity where he'll remember, and then you see it on the credit report and the family's like, oh, I didn't even know that that was a credit card to be paid, and now they have credit lates or mortgage lates or property tax lates. You can't qualify for their mortgages. But a
right.
reverse is a little more forgiving to be able to do that because this is not an uncommon situation.
Yeah, and that's what I love about it too. It's we look at, there's just compensating factors, right? When you have medical stuff, right, and you lay out like, here's what happened and here's what's happening, right? It feels much more than what the opposite is, where it's much more automated, I guess you could say, than more compensating factors, having somebody actually sit down and understand what the file is and what the family's going through, right? That's huge. That's huge. It's not just, oh, I'm sorry, I can't get DU to approve this deal or something like that, right? So that's a
Right.
huge thing. It's a huge thing. It just feels much more, um, you know, um, I'm searching for the word. It just feels more, um, like people's hearts are in it more, I guess you could say. I don't know, more emotionally attached to maybe a file than maybe something else. Like I'm
Yeah.
just saying this. I'm not saying that it is. I'm assuming it. I'm saying, like, with the reverse, there's more of that than maybe with other kind of products where it's,
Yeah. I've
yeah,
experienced that too. Because the underwriters from reverse, they used to not have to financial qualify. And you've seen the power and life-changing ability of the reverse mortgage to stop the bleeding, to help take off the stress, to change someone's entire situation. In reverse, of course, there are stopping points, right? If it's truly not a fit, if somebody's not going to be able to continue paying their property taxes, homeowners insurance, residing in the residence, they got an HOA, and keep the lights on, right? We have to
yeah,
cover those bases. But if there's some credit damage, I love the reverse because if you know what you're doing, like you do, you've been highly trained, you're an advisor in this, you understand that the underwriters are not looking to disqualify. Like, in my opinion, in the forward world, when you do a forward mortgage, they're trying to disqualify. You know, they're saying this, this is the credit score. You're not there. You're bye. Get off my
yeah,
desk.
yeah,
And in the reverse field, it feels like the underwriters are like, well, I can see that today they can pay their bills, but like this thing happened and it is a blemish on your credit. And why don't you tell me a little more about that? And if you really lay out the situation, we have people who've had heart attacks. We've had people who've lost loved ones, divorces. I've had situations where the kids were supposed to be paying the bills and they weren't.
yeah,
And so we explain this stuff, and it feels like there's a little more heart in this arena, and there should
yeah,
be. There's more life
exactly,
events in retirement than in any other time in your life.
exactly, exactly.
Now, I love that you're really your heart is in it, and the underwriters' hearts are in it. And so we help as many people as we possibly can. Again, not to say that there aren't stops. There of course
Of
are.
course. That and that to anybody that's listening, that's in our world, or or maybe you're just a non-mortgage person, but if you are a mortgage person, of course, it's life has that. There's everything to it. There could be a stopping point to everything. Nothing is always perfect, right? So yeah, of course, that's just common sense.
Yeah. Yeah. All right, Shadi, I have a question for you. We are about at our time. So, big question for you is if you could change one thing about the American retirement, what would it be?
It's a good question. It's hard to nail down one thing. Um, and I don't want to make this too like long-winded, but man, we in schools, right? Even in colleges, they don't even tell you how to budget, right? Tell you how to buy a house, right? So I think if you go grassroots, it all kind of starts in our education system because a lot of people don't understand it. We haven't had, I mean, in my lifetime, inflation like this is wild, right? The Fed, excuse me, and the printing machine and the debt that our country has right now is it's incredible. Um, so I think it starts with the education, and then people, let's just talk about the normal middle class, right? What do they really know besides their 401k? That's what they know, right? So if you have somebody that's worked for a corporation and they funded their 401k, uh, I'm again assuming today, right? How much money can you really allocate to that 401k to get you to a space when you're going to retire that money is going to outlive you, right? When you go I'm telling you, everybody that's listening to this knows. I go to this. I walk into Sprouts. Literally, one bag is like $100, right? And it's just dinner for me and my wife. I mean, that's one day a week. I mean, just think about, right? So the inflation today, how much money can you really allocate to your 401k? Are they even advising you on what, you know, is it a mutual fund that you're putting your money into? Um, you know, how is it going to grow? What's in it? What if you put it, you were more aggressive than you were thinking? So the employer does a horrible job. They basically just give you, they'll email you, here's our 401k and here's the list of, investment vehicles that you can put your money into. And it could say Vanguard 2041. And you look and you say, oh, that had a rate of return. It's because it says it on like the kind of small prospectus. That had a rate of return of, say, double digits, right? And you go, ooh, that sounds great. That has more risk in it. So when so your portfolio could be down. So education, I think, is number one. I think it also starts obviously with the leadership in our country, and then yeah, I would just say literally it's education, but not just. Also, it's with the education with your entire portfolio. It's not your portfolio includes your home, right? So you got to have. So if I were to change that, I think that really just giving people much more of an understanding. It's just your retirement accounts, of course. How are we educating people coming out of school, coming out of colleges? Again, people don't know. They just stick their money in. Well, what if your employer lays you off? Like, Fed Powell wants them to lay you off. You don't have a job. What do you do with that 401k? What do I roll it? Oh, where do I go with it? But then again, more than anything else, being in our space, in our world, is, well, when you're coming into your retirement, you have a lot of equity and you got more expenses. What do you do with your equity? Do you sell the house? pay a ton of commission, right? Um, buy purchase another home. You might have, maybe, I don't know, depending on the prop tax rule, you might have more expenses of just moving in general. Who the heck wants to move in their 70, by the way? You know what I mean? So I don't know, long-winded answer, but I think you got to take it all the way back and start it with the school system, right? And teach people when they're young, so when they're older, they have more knowledge.
Right. And some of this people couldn't predict, right? Our grandparents' generation, they didn't have to work for 30 or 40 years and then
Right,
retire on what they saved for 30 or 40 years. They retired for like 10 years. It was a much different landscape. So they could figure out how to do it without looking at the largest asset they own, which is the house in most
right.
people's cases. That's not the landscape today. That thinking is simply outdated, it's obsolete. And I think you're absolutely right. If we can get more education out there now, we're serving the people, we're not able to go back, or at least I'm not currently going back and teaching the college kids. Hopefully we can, but at this point, you're doing a really good job of educating people who are at retirement and maybe not quite prepared, and shifting that mindset saying, okay, look at your entire portfolio. And that does include the house.
Of course it does. Absolutely. The the equity in the home could just, as we're just going through some of these examples, can provide so much for them without an extra incurred expense. Is
Right. Right.
So
The
you're using your
appreciation.
exactly,
Yeah.
exactly. So
All right.
you're
Well, we
using
could
that
go
for good.
on forever and ever.
Yes,
I'm really
I'm a
enjoying
talker.
this. But my marketing people tell me that 20 or 30 minutes are the trend today. So we're going to cut it. But if somebody wants to get in touch with you, we have a link below this video. And can you just tell me a little bit about where you are, what state you're licensed in?
Yeah, yep. So I'm in Southern California, and you can. Can I? Is it okay to give my cell number or my email address, or you have the
Sure.
link? Okay.
Yeah, we're going to
You
put a
can
link
reach.
out. But yeah, say yourself if
Yeah,
that's
if
what you
you
want.
want to call me directly on my cell, it's an 805 area code. It's 857-9706,
And he answers his phone.
and I answer my phone.
All right. Thank you so much for being on today with us,
Thank
Shadi.
you,
I really
Christina.
appreciate it.
It's a pleasure.
All
Appreciate
right.
it.
Have a good day.
You too. Bye bye.
Thanks.